All right, let's get right into it. Something massive is happening right now, kind of under the radar of the global economy. We're talking about a once in a generation realignment of manufacturing, a shift so big it's literally redrawing the map of how things get made and where they come from. Billions, and I mean billions of dollars are on the move, and a whole new world order for trade is taking shape as we speak. And look, this isn't just some minor trend. Our source material calls it, and I quote, the defining macroeconomic restructuring of the 21st century. Now, when you hear a statement that big, you know we're talking about a tectonic shift. It really sets the stage for what we're about to break down. You know, for the last, 30 or 40 years, global business has played by one simple rule: make it cheaper. And that led to this thing called cost-driven hyper-globalization. It's a system where pretty much everything, from the phone in your pocket to the sneakers on your feet, was made as far away as possible just to save a few bucks. Well, that era is over. The world is now moving to a new model, one that looks a lot more regional. So to really get a grip on this, you have to start with the country that was at the absolute center of that old model: China. For decades, it was the factory of the world, no question about it. But now, for a whole bunch of reasons, companies are looking for the exit. So what's really going on? Why the mass exodus? Well, it's basically a perfect storm of three huge factors hitting all at once. First up, geopolitics. The trade tensions between the US and China have turned what used to be predictable business into a super high-stakes gamble. Second, fragility. I mean, the pandemic taught us all a brutal lesson about what happens when your entire supply chain hangs by the thread of a single container ship journey from halfway across the world. And third, plain old cost. The simple fact is that massive cost advantage China used to have, what economists call cost arbitrage, it's just shrinking. As wages have gone up there, it's not the bargain it once was. And that brings us to the most crucial point here. You see, the old playbook was all about just in time. It was this philosophy of extreme efficiency, where parts would show up at the factory exactly when they were needed, so you wouldn't have to pay to store them. But the new playbook, it's just in case. It's a strategy built not around pure cost, but around resilience, around managing risk. And that is a fundamental change in how global business thinks. So this new just-in-case playbook, it has two key strategies that you're going to hear about all the time now: nearshoring and friendshoring. And trust me, these aren't just trendy buzzwords. They represent the entire new logic of global trade. So let's break them down. Okay, so nearshoring is all about geography. It's the simple idea of moving your production closer to home, to shorten those travel times and get more control. So for the US market, think Mexico instead of Malaysia. Friendshoring, on the other hand, is all about geopolitics. It's this idea of building your supply chains with countries that are your political allies, so you can make sure that some hostile nation can't just suddenly turn off the tap for critical goods you need. What you're seeing here is how these two really powerful ideas, one about distance and the other about diplomacy, are starting to converge. And when you apply both of them to the massive North American market, when you're looking for a country that is both geographically close and a stable political ally, well, the map starts pointing overwhelmingly in one direction: south. And that brings us to the main character in this whole story: Mexico. As all those billions of investment dollars start looking for a new home outside of Asia, Mexico is popping up as the prime beneficiary. It's positioning itself to be the new manufacturing epicenter for all of North America. And when you look at the advantages, it's pretty clear why. Mexico has this incredible combination of factors. You've got the USMCA trade deal, which gives a stable, tariff-free framework. You've got proximity, right? Goods can be trucked into the US in a matter of days, not weeks on a boat. It has what's called a demographic dividend, which is just a fancy way of saying a huge, young, and increasingly skilled workforce. They graduate a surprising number of engineers every year. And honestly, don't underestimate the simple stuff. Being in the same time zone makes managing a factory 1,000,000 times easier. But, and this is a big but, this is not a simple success story. I mean, seizing this historic opportunity is one thing. Actually having the capacity to handle it is a completely different ballgame. Mexico is facing some very, very serious internal hurdles that can stop this whole transformation dead in its tracks. Yeah, the challenges are huge. We're talking a critical shortage of industrial parks, not to mention a lack of reliable electricity and water. The security issues are pervasive, and they add a very real cost, a security tax, if you will, to doing business there. And here's the really big one. Even if you assemble a car in Mexico, guess where a ton of its basic parts still come from? China. So true supply chain independence, that's still a long, long way off.
So what you have is Mexico at this historic crossroads. On one hand, it has all the advantages it needs to become the industrial engine for the entire Americas. But as you can see here, that massive potential is balanced on a knife's edge against these very real, very serious domestic challenges.
Okay, so let's zoom back out from Mexico for a second and look at the bigger picture this all reveals. Because this isn't just a story about one country getting lucky. No, this is a preview of the new blueprint for the entire global economy. We're shifting from a single global circuit board to multiple, interconnected regional networks. And right here, this is the ultimate takeaway from all this. What we're witnessing is not the death of globalization. Not at all. It's an evolution. Globalization is becoming regionalization. We are moving away from that single China-centric global factory to a world with multiple regional manufacturing hubs. This is really the ultimate expression of that just-in-case thinking. You get the security of friendshoring combined with the efficiency of nearshoring. So you can picture it, right? A hub in Mexico for the Americas, one in Eastern Europe for the EU, and another in Southeast Asia for the Pacific. Proximity and politics, those are the new cornerstones of trade. Which leaves us with the critical question for the next decade. We know the opportunity is there. We know the advantages are real. But can Mexico overcome its own internal bottlenecks in infrastructure, in security, in governance to truly seize this moment and become the industrial engine of the Americas? The answer to that question is going to define the economic future of the entire continent.